Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today we are going to put some things in perspective and we're going to illustrate some absurdities because that's what we do here. So let's get going. The first thing I wanted to make you aware of, I saw this on ProCoin News. There are two hacks that have occurred in crypto, okay? Celsius Network loses $50 million in a hack. Bitmart hack loses 196 million. So I want to use this as a reminder. I keep telling you all out there, and a link to this will be in the top of the description of this video. You need to have an antivirus. You need to have a virtual private network so you're surfing the web anonymously. Because if you're buying crypto, it's a possibility that you could be targeted by some of these bad guys who want to steal your crypto, and so you need to be as protected as possible. They're doing an 88%. I guess they're doing an 88% off at Pure VPN. Just go check the link in the top of the description of this video. Now we had a major market sell-off. The market is now at 2.231 trillion. I think, and don't quote me, I think it had gotten as high as like 2.6 or 7 trillion, but there was quite the bloodbath. I think a lot of things have kind of recovered a little bit. We've got a 77-cent XRP. Let's look at Algorand's $1.66. We've got I think I missed it. Stellar is at 26 cents. Here's what I was waiting to get my money in a situation to do so. But just so you know what I'm going to be doing, I'm not telling you what to do because I'm not a financial advisor. What I'm going to be doing is I'm going to be, when I get a decent amount of money, maybe today, I'm going to be buying into XRP, XLM, and Algorand. I'm going to be spreading across those three because I do buy these dips. Now, I want to give this, before I go forward, well, let's play this video. This is the guy from Grayscale on CNBC, and he's talking about what happened in the markets and what he thinks.
The idea that there was some positions being unwound in terms of leverage. What do you know about that? Was it on derivatives related to Bitcoin, or as Andrew was pointing out, was it other places where you can just leverage the hell out of just physical Bitcoin? And was that a big reason for such a quick, violent drop?
Yeah, we've seen this before where there's a lot of leverage in the system that does quickly get unwound. I believe this weekend there was over $1 billion of liquidations that occurred, and there are still places within the crypto ecosystem where you can get outsized leverage on Bitcoin trades. And so that does certainly lead to some volatility when you do start seeing, dramatic movements in price.
You're so nice about in talking about it. And I guess you're used to it. It leads to some volatility. I mean, people aren't used to, if you bought it at 65,000 and you woke up Saturday morning and you saw it at 42,000, that's not your grandfather's, CD and no one expects it to be that, but that's even rare to see in even the most, volatile segments of technology or small caps or whatever. I mean, those are big moves, Michael. You're used to it, and it's something we need to embrace.
I think so. Investors know that it comes with the territory. I mean, whether it was the number of drawdowns we've seen in 2021 or just zooming out over a longer time horizon, you do see the price continue to kind of have these series of bubbles and bursts where the price moves dramatically. You see a pullback at bases and then continues to move on to, take on new all-time highs. Now, obviously, if I had a crystal ball, I could say with some assurity that the price would continue moving upwards. But I think what investors certainly know is that if they can't stomach the volatility, it's probably not the right place for them to be investing.
Okay, so I want to make a point along the lines of this market and all. This is Dan Moorhead. He had tweeted this out on the 23rd of November. I want you to look at this. This is performance January 2020 to present as of November 23rd. I want you to look at the traditional assets. S&P 500 was up 44%, which was probably a lot more than it usually is on an average year. Oil's up this, and it shows you kind of real estate, corporate bonds, and different things that and how they had performed. And then I want you to look at the performance of some of the major crypto assets this year as well. Okay, so to put this in perspective, and what happens every time we have a quote crash in crypto is that CNBC and all these people, they immediately, that's their favorite headline, is that crypto crashed, Bitcoin dropped 20%. Well, look at these numbers. Understand. I mean, life's pretty easy to get. It's pretty easy to understand. If my upside is, in the case of S&P 500, if a good year is a 44% year, if the S&P 500 dropped 20%, that would be a lot more significant when you look at it from this perspective than let's say my Ethereum that's up 3,240%. And that drops 20%. You're not comparing apples to apples here, folks, is my point. If the S&P 500 was doing thousands or even hundreds of percent a year and it dropped 20%, it wouldn't be as big of a deal as it is because of how it traditionally performs. You're in an asset class that is high risk, high potential, high return, or potential high losses. I mean, that's life. Greater the risk, the greater the potential reward, or you could lose it all. That's how it works. That's why, and people, I laugh to this day. My logo is, I told people on this channel back in the bear market, there were several times when I said, you need to put your big boy pants on or your big girl pants on and understand what you're investing in. If you can't stomach a 10, 20, 30% down in a day, then you don't deserve these. It's just, I mean, if you're not comfortable with that kind of thing, then you don't need to be investing in crypto, because this is the nature of the beast. We have all kinds of risks that you don't have. Like for instance, if you go and right now and you go and buy Facebook stock, well, Facebook stock is a regulated security. It's regulated by the SEC. You don't have the risk of that. You don't have the risk of regulatory uncertainty associated with that stock that you do with a lot of crypto. And so that's a huge risk that you don't have to face when you're owning that Facebook stock. Well, in return, that Facebook stock does not have near the percentage upside that something with that higher risk, or downside with that higher risk of having that regulatory uncertainty. It's the nature of the beast. And you got to decide if you're going to have big boy pants on or not. If you can't put big boy pants on and you don't have a pair of big boy pants, then what you need to do is not be in crypto. What am I here for? I've told you before. I'm not here for big returns. I'm here to create a dynasty. I'm in the empire business. And in the empire business, you have to take tremendous risk to at least get to the empire. Now, once I get to the empire, I will spread my risk out and play it a lot more conservative. That's what the wealthy do. When I was a financial advisor, the wealthiest people that invested with me, do you know what they bought? They bought municipal bonds. Municipal bonds are tax-free municipal bonds. It's a way for them to preserve their wealth. Once people are worth $10 million, $100 million, then they go into preservation of wealth mode, earn interest on the money that you have because you're now wealthy. You don't have to be as aggressive. But for the rest of us that are trying to get up there, we have to be aggressive if we want to and take higher risks to have that shot. Unless you're a lawyer or a doctor and you want to just make a lot of money the slow way, but most of us are not. Okay, I think I've illustrated my point. Now, Rosalind Layton this weekend wrote an article in Forbes, Who Will Protect Investors from the SEC? She's right. Now, that article, I don't pay for Forbes, but going through the article, it was, as usual, it was a great article by her, and she was pointing out the conference that Jay Clayton and Gary Gensler had this past week, and how the elephant in the room was the XRP lawsuit, and how all of the people in the room were looking at each other because Gary Gensler was talking about how you should come in and see them and get registered, and everybody was looking at each other going, registered for what? What do you mean? We don't know. Nobody knows. Well, Warren Davidson had retweeted her article, and he says, who indeed? It's Congress's job, not Gensler's, to make crypto law. Everyone who cares about the future of crypto should demand legislation which makes the rules clear for the people and the SEC. He goes on, the Token Taxonomy Act has been begging for a hearing since 2018. Ask Maxine Waters and Patrick McHenry. Notice it for 12/8/21. All right. Now, Rob Licker makes a very good point here. Digital Assets Working Group is headed by Brad Sherman. In other words, Maxine Waters runs this Financial Services Committee. All of my indications from all of these people that are currently running the show, like Maxine Waters, is that they are anti-crypto. We know Brad Sherman is anti-crypto. I can show you the video. We know that Elizabeth Warren, I don't think she's on the Finance Committee, maybe she is, but we know she's anti-crypto. We know she's buddies with Gary Gensler. Okay? So there's a lot of I don't know what kind of power a Warren Davidson has in this situation, folks. I mean, we literally have people who are anti-crypto that are running this. And I saw something this morning saying that Maxine Waters had made a comment that she was going to hold these crypto CEOs accountable in this hearing, but she didn't say anything about holding Gary Gensler accountable. Okay, so look at this. So John Deaton you need to keep on pounding. You need to keep contacting Congress. He gave an update about crypto law. He's got his Connect Congress. So you can go to crypto-law.us, and he's got a Connect Congress link there. So you can click that, and you can contact your Congress people and tell them that you are pro-crypto, and tell them how you feel about all this. Crypto Law Connect, there's been 7,253 messages sent, total senators contacted, 100, total representatives contacted, 426. All crypto holders should contact their elected representatives before Wednesday's hearing. Now, I want to bring your attention to something else. Now, here we are, folks. Here we are. Cryptocurrencies is what we're talking about. Here we are in the midst of this. Gary Gensler won't talk to XRP holders. He doesn't act like he gives a rat's behind about investors that he's supposed to be protecting, even though that's all he ever talks about. But here's who he is talking to in the midst of all this, folks. You couldn't make this up if you tried. If anything terrifies me for my children's future, what I'm about to show you does. Look, I can't tell you how many people I've talked to in the last 6 months that see things like this, and they say, you know what? Is it time for us to find somewhere else to live? Because these people, it's almost like these people are trying to destroy the United States of America, folks. Listen to this is the person that Gary Gensler, this is Gary Gensler's calendar. This is who he's on the phone with while he does not respond to American and otherwise XRP holders, 60,000+ of them. This man that you're about, this is a 60-minute segment from 1998. This is the man who he is on the phone with, communicating with.
Last year, when he saw cracks in the Asia boom, he began selling the currency in Thailand. Traders in Hong Kong followed suit, triggering a financial crisis that plunged much of Asia into a depression.
In the last 2 years, you've been blamed for financial collapse of Thailand, Malaysia, Indonesia, Japan, and Russia.
All of the above.
All of the above.
Yeah.
Are you that powerful?
No, I think there's a great misunderstanding.
The Prime Minister of Malaysia said that the region spent 40 years trying to build up its economy, and along comes a moron like Soros with a lot of money, and it's all over. He called you a criminal.
It's easier for him to blame an outside force than to admit that they were mismanaging their economy and their currency. The French finance minister talked about hanging speculators from lampposts.
Soros says the Asian currencies would have collapsed even if he hadn't been in the market. They were overvalued. He says people tend to follow his lead because he's been so successful.
I think that I've been blamed for everything. I am basically there to make money. I cannot and do not look at the social consequences of what I do.
Like risking $2 billion in Russia. When the Russian market began falling apart in August, Soros was the country's single largest investor. He called the U.S. Treasury and asked Uncle Sam for $7 billion to prop up the ruble. When U.S. officials failed to intervene, Soros wrote a letter to the Financial Times of London saying he thought the Russian currency should be devalued by as much as 25%. A few words from Soros were enough to cause panic selling that fueled the crash.
Okay, well, you think that's bad? Try this one on for size. Same guy, same Gary Gensler, chairman of the SEC.
I don't feel guilty because I'm engaged in an amoral activity which is not meant to have anything to do with guilt.
Part of the reason he is so rich is that the Soros hedge funds operate offshore in the Netherlands Antilles to avoid scrutiny by the Securities and Exchange Commission. So even while Soros tells Congress and the Treasury that hedge funds must be regulated to stop the global crisis, he's avoiding the rules.
Why is it that Americans can't invest in the quantum fund? It's an offshore fund. Why is that?
Because the fund is not registered with the Securities and Exchange Commission. We are not
Licensed to do business in the United States.
That's right.
Because?
Because we are not registered with the Securities and Exchange Commission. Because we find it more convenient to operate without it.
So in some ways it's to escape regulation.
Yeah, that's right.
Okay, now think about this for a minute. Think about the irony here, folks. The chairman of the SEC is going after Ripple, an American company who stayed in the United States and tried to work with regulators from the beginning. He's not going after Ethereum, who did exactly what this guy just described in this video that he did. He's not going after Ethereum because we've got Vitalik Buterin in his own words talking about how they located in Switzerland to try to avoid U.S. regulation. He's not going to, and by the way, that doesn't give anybody a free pass. We've played video of Valerie Chapinick from the SEC saying it doesn't matter if you're in some other country. If you're even touching the United States, we can go after you. So don't think that's an excuse. They're not going after Ethereum, Vitalik Buterin. This guy he's on the phone with, he's literally on the phone. That's the most disturbing thing on the planet, folks. He's on the phone with this guy and not even speaking to the investors out here that he's supposed to protect. Boy, we live in, this country is not the country I grew up in. This is a creep show we're living through, a total creep show. Now, John Deaton points something out here, and I'm going to reiterate his point, okay? He showed a video that I had put out a while back, okay? He says, huge evidence in the Ripple case. Nancy Wotas was a part of the working group with Perkins Coie. Nancy basically states that if you can show that your network is a little more decentralized than Ether, you're golden. The Perkins Coie lawyer, which is this woman, immediately replies, why isn't Ripple? Okay, this is an old classic here.
What's interesting is I don't think Ether is decentralized. I think it's fully functional, but I don't think it's decentralized. But the chairman, the division director said it's decentralized. So, hey, look at the metrics for Ether. And, hey, you do a little better than that, hey.
Then why isn't Ripple? Yeah, and I wonder if
Exactamundo. This woman was literally, folks, she was literally in the room when they were presenting what would become that safe harbor memo to Bill Hinman and friends, and then he goes out and gives the speech. And she doesn't even think Ethereum's decentralized, folks. Now, John Deaton tweeted this out, and he says, people are asking why this clip is such important evidence. Judge Netburn ruled that the SEC's analysis of Bitcoin and Ether are relevant for two reasons. The court's own analysis of whether XRP is a security and Ripple's fair notice defense. Nancy Wotas was part of the working group that met with the SEC and presented it with a safe harbor proposal highlighting Ether. These meetings with the SEC, along with the memo, is what led to the Hinman speech declaring present-day Ether sales as not sales of securities. As to Howie, if we show the XRPL is equal or slightly more decentralized than Ethereum, today's XRP is not a security. The comments in the clip show what market participants believed. Ripple can argue that after Hinman's speech, it was reasonable to not believe XRP was a security. All right, then we have this. Remember when the XRP ledger this week was having hiccups and whatnot, right? I said, hey, Gary Gensler, to quote Bill Hinman, putting aside the politically motivated SEC lawsuit, XRP is decentralized. This is Viets Avin, who has his own company, XRPL Labs, okay? It really is mind-blowing. He's talking about all of the contributions that flooded in a decentralized fashion from all over the world into his XRPL Labs to help fund and to create nodes and help to fix some of the issues they've been dealing with. Quickly became a significant upgrade to the public XRPL infrastructure, an upgrade that can make the difference between a bad and a good XRPL user experience. And he's talking about this particular donor. Recurring donations also cover electricity, connectivity, bandwidth, or parts. I'm so proud, Upcoming week, I'll share details about the lead time for the hardware I'm about to order. Right now, we're looking at over 20% increased XRPL public node capacity thanks to the community, not to Ripple. He's thanking the community. These were people all over the world, all over this decentralized community, all over the world that put in there. Put that in your pipe and smoke it, Gary Gensler. You ought to be ashamed of yourselves. By the way, while all that was going on, you'll never guess who's in freaking Antarctica looking at penguins, and that would be David Schwartz, the CTO of Ripple, who was not contributing in any way to fixing these problems that were going on. You see the point? I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that XRP